Good afternoon, everyone. Today is Wednesday, the 4th of April, 2012, and this is Brian Shannon from Alphatrends speaking. Thanks for tuning in. If you looked at my blog today, you would have seen this little birthday cake here. Alphatrends. I started this website as a blog, alphatrends.blogspot.com, 6 years ago today. And anyways, so I put up my sixth year little birthday cake here. And anyways, here's a link to that first blog post and my first YouTube video as well. Alpha Trends has been a premium subscription site for the last couple of years, and I'd raised the price about a year ago to $99 a month or $7.99 a year. The price of this service has never been discounted. That is till now. Right now, through the end of April only, and I promise it's not going to be repeated or anything like that. It's going to be $399 for an annual subscription. So $400 per year for savings. If you're doing a monthly plan of $99, you're going to be saving a heck of a lot more. Here's what you get for it. The videos like you see at the end of each day, and we're going to go do today's analysis as well, but you get the end of the day video each and every day. You get new swing trade ideas every single day with specific entry, stop loss, and price targets, and we follow up on those the next day. We've got a chat room. I don't know if you guys are aware of that, but there's a chat room on Alpha Trends for subscribers, and what I'm doing is I'm going to be in there Monday through Friday, and I'm just I'm usually there full time, but I'm making the official hours from 9 a.m. to 12:30 Eastern each afternoon, because I don't tend to trade as well in the afternoon. There's less opportunity generally, and that frees me up to do some more research and other things that can bring value. Every other Monday there's a live webinar, and that's a good time for you guys to ask questions. We take a look at stocks that you're interested in, that and sort of thing. And I'm going to start doing a midday video again, Monday through Thursday by 1 p.m. each day Eastern. Just a really short, 3 to 5 minute update on some of the stocks, and just a look at the market's key levels and that sort of thing. And also, this is a new thing as well. If you join with an annual subscription of that $399, I'm going to do one free webinar, one-on-one. So just you and me talking about whatever it is you want to talk about in the market. There's some more information about it on here and where to subscribe. So if you take a look at that, go to alphatrends.com. It's right on the home page. And let's take a look at this market now. We were down about 1% today. Yesterday I noted the market seemed a little bit lethargic. We're still, of course, in this uptrend that's really defined by this longer term trend line and that rising 50-day moving average. The key important level here for the next couple days, and I'm going to be out of town. I'll be back on Tuesday morning, so I'm going to miss the next two market days. But the key level will continue to be about this 138.5 area, and we're getting close to where the trend line would hit in there as well. But it's been prior resistance and then support in here. You can see that the rate of ascent has slowed recently, but we are still within this little up channel. If I drew it correctly, you would see that we've got a nice little channel here, and we came down to the bottom end of that channel here today. So more importantly, though, I think is the 138.5-ish area. If we can stick above there, then we're still in an uptrend, but we still give the benefit of the doubt. Now, what we're starting to see is we're possibly going to have that 10-day moving average cross down through the 20-day moving average here, and that just kind of represents indecision, that moving average crossover, if it occurs. And just a couple more days of sideways action would turn it, that is the 10-day down through the 20-day, and perhaps we're just going to correct a little bit more through time. If, however, we do see a deeper pullback, and there's reasons for a little bit of concern here, and primarily I think from the semiconductor. The semiconductors broke down through what had been an important level of support at about that 35 level today, and you can see they've come down to their important trend line and that 50-day moving average. So I don't think the semiconductors are going to fall apart. I would expect they're going to struggle to find some support in here. I wouldn't be a buyer though, because we have what's potentially limited upside by that 35.20-ish level where we broke support. So this support broken, it will be very interesting to see see if it does in fact become resistance. We'd seen that of recent just here in the TLT that the 20-year bonds broke down, and that prior support held as resistance so far. Now we want to see, are the semiconductors going to hold resistance at that prior level of support? If so, then it's going to have an effect on the broader market as well. So that's something to be aware of. If the semiconductors can make it back above and hold above, I think for the week close 35.20, that would be nice to see. That is for the week, not for a WEAK close. It would be a sign of strength, actually. The Nasdaq, we saw pull back right down to the 20-day moving average today. Today's low was 66.91, and that 20-day moving average is at 66.95. So that's something we've been talking about. We're still clearly in a strong uptrend, and that trend line has been defined by the 20-day moving average as well. So we're not breaking down in the Nasdaq. We broke a little bit of support here at this 67.30-ish level, but we kind of pulled back up into it here at the late in the day. The one thing that tells me that we perhaps need a little bit more time to correct in these markets is we do have declining 5-day moving averages. Now, it doesn't mean we're guaranteed to sell off, but if the Nasdaq does continue down, I think about $66.40 is where we would want to see it initially hold. If not, perhaps we get a more fear-driven sell-off, which we haven't seen in this rally yet. I guess we had a little bit of a fear-driven sell-off there, but perhaps we can see this market drop all the way down even towards 65 in the coming sessions here. It's not a prediction, it's just something to be aware of, that if we break below that 66 and a quarter area, that there's a good possibility, I think, that we get down to that 65 where we have that 50-day moving average slowly, actually rather rapidly rising up. You can see that the 50-day moving average today was at 66.45, and yesterday it was 66.30, or 64.30. So it gained 15 cents here over the course of one day, on the day when the market was going down. So that's important to be aware of, because we're getting rid of data from 50 days ago and replacing it with today's data, that we're still seeing the moving average rise in spite of a market that's sold off a little bit. So the market is signaling caution in here. The Russell 2000, as we know, has been battling that 83 level. Let's just let me move this out of the way. But here's that trend line from the lows of last year, and we can see that we've been getting more frequent tests of that trend line. Today we finally broke it. Breaking the trend line, I say ad nauseum, doesn't mean that the trend is reversing. It means the rate of ascent has slowed, and perhaps we need more of a sideways correction through time. 81 remains a key level in this market, and something we want to remain focused on. We're right at the 50-day moving average right now. Let's clear these lines off so we can see that. We're right at the 50-day moving average, and a close below it wouldn't be, even if we close below 81 for another day, maybe we could shake some people out, get some shorts involved. The point is, we're at a place where it looks kind of indecisive here. The gains haven't been coming as easily. We have in the next week or so, the earnings are going to start to flow in for the first quarter of 2012, and this is kind of maybe just a little bit of a pause in the market where people kind of regroup and say, wait a minute, let's take our foot off the pedal a little bit, wait for these corporate results, and then we'll decide which stocks we want to get involved in. We've had a hell of a rally the first quarter of this year, and now to digest the gains is not unusual. It doesn't mean we're going to fall apart. The financials still holding generally above that 50. Well, they are above that 1540 level, and 1540 I think is really 1540 to 1545. We're at a key level right here. So we're at the bottom end of the range that this market's been in for the last 2 weeks, at 1540 to 16. And now we have a declining 5-day moving average. So we are, though, on the 20-day moving average. Here's a test of that. It didn't hold. You can see on the last time we had it drop below there, we had a nice shakeout, and from that failed move came the fast move. Now we could take a look at this and actually say, from that move, we could take a look at some Fibonacci in here as well and say where are the potential support levels based on a pullback or for a pullback to maybe find some support based on Fibonacci. And we still have that 1540-ish area telling us it is an important level. And I think, you close it below 1540, I think you're likely to see this market drop back down towards that 1490 to 15 level that had been resistance for a while this year. So big cautionary signs in this market right now. And I want to clarify something else as well. Something that I've been harping on for the last close to 9 months or so, I would say, has been the fate of the company Penson. Penson is a clearing firm for many brokerage firms, and I don't like to keep my money with companies that are possibly in trouble. Now I've been told that that the stock is being beaten down because they're restructuring. I'm not sure the details of that, and basically that the common shareholders are taking the heat here, but the company is financially stronger than it's been in a while. The company really brought red flags back in here. They did some kind of racetrack bonds that people were kind of questioning their accounting and that sort of thing. And then they've been the problem with any stock in a downtrend is you tend to hear things from the executives that maybe aren't always pointing to the 100% to what the real story is. I posted a chart on Charlie today because somebody had mentioned to me actually in the chat room that they heard that Penson was a takeover target, and I will tell you that takeover targets do not, if you're hearing about a takeover target and there's any truth to it, what you want to see is an uptrending stock. This is not a stock that's being accumulated for a buyout. So the point is, whether or not you're gonna you do any business with Penson, I'm not trying to scare anyone about that. I think your money is always safe with the SIPC insurance and that sort of thing. However, it's just something that I've been harping on for a while, and I'm seeing it because it's in the industry I'm in. And the stock, since I started first really mentioning the troubles with this, the stock's down 90%, and you can't ignore that. So there's clearly issues there. Anyways, let's go back to Alphatrends for a moment. I won't be in tomorrow, that is Thursday, or on Tuesday. So if you subscribe and you don't see any activity, that's why. Please do take a look at alphatrends.net, though. I appreciate everyone stopping by, listening to the video, checking out the videos, and for allowing me to continue to, value my work over the last 6 years. I really do appreciate it, and look forward to continuing to bring good information to you guys, and hopefully bring on some new subscribers. So thanks for tuning in.